When a position breaks to bearish trade but remains bullish trend, should it be immediately dumped? I've been cutting losers quickly only to see them return to bullish trade a few weeks later, and I'm now trying to exert more patience with SPACs in particular. Is this the correct approach? There's actually a few things to unpack in here. I think on SPACs, the first one, of course, is you sort of have some downside protection if it hasn't converted, right? The $10 price. So maybe you set SPACs to the side a little bit, because if it's getting close to 10, you definitely want to be a buyer if you like the management team. But yeah, what are your thoughts on that, Keith, when something breaks from bearish trade to bullish trend?
Well, when it's bullish trend
bearish trade but remains bullish trend.
Well, then I'm not as big in those positions. As I've said many times, as you know, sounds like the subscriber's not a real-time alert subscriber, but you should be, because we'll do real-time alerts live session. We might do one tomorrow where I say this 100% of the time. Yep. The biggest positions you should have are the positions that are A, bullish trade and bullish trend, and B, signaling higher highs in the risk range.
Yep.
Okay. Smaller positions are positions, i.e., start to cut your losses, take taxable losses. When something goes from bullish trade and trend to bearish trade and bullish trend, because that is potentially the beginning of a trend breakdown, like Tesla. Tesla A, write it down. Lower high was the first signal last Friday. I'm like, what's going on here? That was the number. You guys asked me, what's in your notebook? What's the biggest question you're asking yourself? And I didn't pull that out of my ass. I pulled it out of my notebook, right?
That's true.
You can go back to that day, and it doesn't matter. Like, if people want to audit it, but I do think it's important for people to actually have somebody out there who's like writing stuff down and accountable to what they're doing. Like, you can literally look inside my playbook, and that's where it was. It was at the top of the list. So A, Tesla signals lower high. Okay, that's the beginning of, and again, when this has to do with the whole market too. So when many of you are worried about, when are you going to quad 4? Like yesterday at 9:50 a.m., did you think it was quad 4? Like, terrible thought, terrible, awful, right? It's okay to tell you that. I was talking to a money manager yesterday. He's like, well, why do you pick on me when I make a mistake? I'm like, I don't care if you make one mistake. I don't care if you make one mistake in a hockey game. If you're 13 years old, if you make one and your name's Jack McCullough, I'm going to show you the video of that mistake so that you can learn from it and get better. It's not about being critical. It's about coaching, right? So anyway, let's go back to the point. A, and this is for the whole market. As soon as I see a lower high signal, okay, that would be a problem, okay? At least some kind of a beginning of a potential problem, or it'll just go away. And you got to be comfortable with both. Tesla's could have went away, or it could continue to exist. Today, it continues to exist. So the first thing was a lower high. The second thing was a break in the trade. The third thing was a break in the trend on accelerating volume and an breakout in volatility. Bang, 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 just like that. You're dead. You don't buy it. That's not a dip, right? That's the beginning of going from a bullish trend to a bearish phase transition. And these are all words that matter. Again, there's a sequencing to it all. You don't have to make calls on stocks or markets. You have to be measuring and mapping what those stocks are doing, what markets are doing. So do more doing and less wondering about the why.